Hello, I'm Elaine Floyd, Director of Retirement and Life Planning for Horse's Mouth and author of the Savvy Social Security Planning for Boomers package. For all of the Savvy Social Security Planning calculators, you will be entering benefit estimates provided by the Social Security Administration. During this session, I will show you several ways to obtain these estimates depending on your purpose. First, I must remind you to remind your clients that you will not be working with precise numbers. All benefit estimates issued by the Social Security Administration are somewhat rough, and the further away a person is from eligibility age, the rougher those estimates are. A person's exact benefit remains unknown until the person actually applies for Social Security at age 62 or later. Between now and then, the actual benefit can be affected by whether or not the client continues to work, how much the annual COLAs are, and for clients under age 60, what the average national wage index will be from year to year. The average wage index determines how the earnings will be indexed and what bend points will be used in the formula to calculate the official PIA at age 62. And of course, the projections shown by our calculators could change if the PIA turns out to be different, or if COLAs average more or less than the 2.8% we're assuming based on the trustees' assumptions. So anytime you're using the calculators with clients, make sure they know that these are estimates only and are close enough for planning purposes to help determine the best claiming strategy, but their actual benefit amounts will be different. Here are 5 ways to estimate a client's primary insurance amount for use in the calculators. One is to ask a client to bring in his latest annual statement from the Social Security Administration. The second is for the client to go online and use the retirement estimator. The other 3 make use of one of the SSA's online calculators. The easiest and most common way to obtain a client's benefit estimate is to look at the client's latest annual statement from the Social Security Administration. Here's a picture of my latest personal benefit statement. It tells me that if I continue working until I'm 66, my benefit would be about $2,221. This is my primary insurance amount, or PIA. This is the number we're interested in for the calculators. It assumes that I'll keep working, but it does not add future COLAs. That's what we want, because the calculator will add the cost of living adjustments. So if you have your client's most recent statement, that's all you need to run the calculators. However, as you may know, the Social Security Administration has temporarily stopped mailing out annual statements. If your clients have their most recent statement, you can use that. Otherwise, you can go to the second method for estimating clients' Social Security benefits, the retirement estimator. For this, you'll have to instruct the client to go to the Social Security website and enter his personal information into a secure website. Then the retirement estimator will tap into his earnings history and bring up his benefit estimate. This tool makes you swear that you are the person whose benefit you're trying to bring up, so it's probably not a good idea to run it for the client on your computer. Ask the client to run it on himself and bring you a printout of the estimate. And here you see an estimate of my own benefit, which matches the amounts shown on my most recent statement. It's too bad it doesn't show the earnings. Being able to see a client's earnings history helps in Savvy Social Security planning in 2 ways. One, it allows you to remind clients to check the earnings to make sure they're accurate. And 2, it gives you an opportunity to look for low earning years. Then you can encourage the client to work a few more years to try to improve her earnings. I say her because it's often women who can benefit the most from working a little longer. But it applies to self-employed men too. For example, some tax advisors recommend that business owners pay themselves a low salary in order to reduce their FICA taxes. But this causes Social Security benefits to be lower. Since Social Security generates COLA-adjusted income for life, it often makes sense to maximize salary and the eventual benefits, even if it means paying higher FICA taxes. So in looking again at the retirement estimator printout, we see that my benefit at full retirement age will be $2,221. This is my PIA and is the amount we will use in the Savvy Social Security planning calculators. Okay, so now we've looked at 2 ways to estimate a client's PIA. One is to refer to the client's latest annual statement. Another is to use the retirement estimator on the Social Security website. These are by far the most common and easiest ways to get a client's PIA. But if you don't have access to the statement and don't want to wait for the client to run the retirement estimator, there are 3 other ways to do it using the calculators on the SSA website: the quick calculator, the online calculator, and the detailed calculator. The quick calculator does not tap into the client's earnings history, so it's not terribly accurate. It asks you for the latest year's earnings and then extrapolates. It's most useful for when you want to give a demonstration to a client using a number that is somewhat close to the client's own PIA rather than picking one out of the air. For a client who has been a high earner all his life, it'll be more accurate than for someone whose previous earnings are more variable. To get the PIA, where it asks the month and year in which you plan to retire, put the month and year that the client will turn 66. Down at the bottom, ask for the result in today's dollars. The savvy calculators will adjust for the COLAs. Here is the result for a person born in 1950 who has maximum earnings. His PIA in today's dollars is $2,284. Let's see how this compares to the other calculators. Number 2, the online calculator is more accurate than the quick calculator because it considers the client's earnings record. The downside, of course, is that you have to enter the entire earnings history. In order to do that, you need to have the latest annual statement in front of you, and if you have that, you might as well take the benefit estimate off the statement. But it does allow you to project future earnings that are different from the earnings assumed for the annual statement or the retirement estimator, so it may be useful in some cases. If you have a client who's been a high earner all his life, you don't need his actual earnings history. You can just enter the Social Security maximum taxable wage base for each year. This can be found on page 45 of the Financial Advisor's Guide to Savvy Social Security Planning, and also on the laminated client handout, the Baby Boomer's Guide to Social Security. Here, we've entered the maximum earnings going back to 1980 for a baby boomer born in 1950. The estimate should be the same as the estimate we got from the quick calculator. But no, here we see that the estimate from the online calculator is nearly $200 higher. The online calculator tells us it's $2,450 compared to $2,284 from the quick calculator. Now let's download the detailed calculator and see how the estimate compares for our 62-year-old maximum earner. The detailed calculator is a very comprehensive calculator that provides a great deal of flexibility in estimating benefits. There's a lot more going on here than you want to know right now, so I'm going to run quickly through the screens. You can download it at your leisure and play around with it all you want. On this first screen, we just enter the client's birth date, sex, and type of benefit. On the next screen, supplemental worker information, we enter the date we want benefits to begin. For the PIA, we ask for the month and year he will turn 66. The years for which earnings are specified are 1980 through 2015. And since we want to keep everything in today's dollars, we're not going to specify any increases in earnings. This is just another benefit screen that gives us several options for escalating benefits. And again, we want to keep everything in present dollars, so we ask for no benefit or wage increases. This is the first screen onto which we enter the client's earnings. The year is 1980. Since we're assuming the client earned the Social Security maximum every year, we just click the button that says maximum. Then we click next year, and it goes to 1981. We keep hitting maximum and next buttons until we've gone all the way through 2015. When we're all done entering earnings, we go up to the File menu and click Calculate Estimate. This text box pops up. It shows that the primary insurance amount is $2,450, which is the same result we got from the online calculator. Page 2 of the printout shows each year's earnings, so you can see the amount of earnings used in the benefit formula. Further down on the printout, it shows exactly how the benefit was computed with the 3 bend points. For anyone who's curious about the inner workings of Social Security, this downloadable detailed calculator will give you the formula and show you all the assumptions used in the benefit estimate. It's really quite interesting. But for our purposes now, we really just want to find out how to estimate a client's PIA for use in the calculators. Here's a summary of the methods. The annual statement is accurate, but unless your client saved his latest statement, you can't rely on it until the SSA resumes mailing statements. The retirement estimator is also accurate, but you need the client's cooperation to get it. The quick calculator is the least accurate, but it is quick and easy. The online calculator is accurate, but you really need the client's earnings record unless he's a maximum earner and you pull the earnings from the table in the laminated client handout. The detailed calculator is also very accurate, but again, you need the client's earnings unless he's a maximum earner, in which case all you have to do is click buttons. With your client's PIA in hand, now you're ready to use the Savvy Social Security Planning calculators. First up is the Spousal Planning Calculator in Part 3 of this orientation.